morning, everybody, and welcome to Las Vegas. How many people go to Money 2020 in this room? Oh, not many. Good. It's a new audience. My name is Thad Peterson. I'm with Aite Group. We have a distinguished group of panelists who like each other so much they decided to share a sofa. Before we get started, I wanted to just bring up some data around what happened over Black Friday in payments. We don't have the full holiday data, but there's some interesting touch points around that. 71% of Black Friday sales occurred in store versus 75% in 2016. 86% were in-store transactions. 73% of the transactions were made with a chip card. The EMV chip card, which we started about 3 years ago in this country, has taken a while to get going, and now it's obviously a critical mass. One of the important touch points that's out there is the percentage of transactions that are digital commerce, and the normal number that is thrown around at this point in time comes from the Fed and a few other people, and it's around 8 or 9%. But if you take things that don't lend themselves necessarily to digital commerce right now, such as car sales and groceries and things like that, if you take that out, the number is much closer to 20% in the US, and that's a really big deal. And that 20% is causing a real challenge with retailers. Retailers no longer control the customer experience, and they lost it when online started to happen. They can't tell the customer what to do. The customer chooses where, when, how, and what they buy. They can buy anything from any place, and they have perfect information. And that's a real big challenge for any retailer. The payment used to be just kind of like an add-on to the transaction, but it's since this transition, it's become incredibly important for two reasons. One is it's a major source of friction in the transaction. We all have been in a supermarket when there's a lovely little old lady in front of us who pulls out her checkbook and we all roll our eyes. That's massive friction, okay? And the flip side of that is one-click buy, or Uber being the ultimate on that. So it's removing the friction that's very, very important. The second one is integrating the payment into the process of the sale so that it adds value as it goes, and it helps the merchant with the information that they receive. So it's an interesting environment, and we have several people here to talk about it. So I'm going to throw out the first question to the panel, which is, what do you guys think the biggest challenge is to retailers and people who are selling stuff? And I'll start off with Lee.
Yeah, sure. Hi. My name is Steve Lee. I'm with Synchrony Financial. And Thad, I think that question, it's a kind of loaded question. I think there's several different ways to look at it. I think the retail is currently going through a transformation. I think, that is influenced by several different challenges that are at play. I think one of the challenges that's kind of obvious is the shift in customer expectation. As we know, we all carry a smart device in our pockets. The advent of technology and the networking, as well as this whole digital native movement, has made everyone really to become a subscriber of this concept of being able to shop and pay for things and really buy anything, anytime, anywhere you want, right? And that expectation and that usage is really driving some of the challenges for the retailers in many aspects. And I think, Thad, you mentioned that the retailer used to control how customers need to shop and how customers actually engage with the retailers. But I think what the retailers need to figure out is having a strategy to really
Can we hold off for a second? Let's hold off.
Yeah.
Get them. And while we're holding off, why don't the rest of you introduce yourselves and we can get that taken care of too.
Good morning. I'm Barrick Farmer. 1993, I co-founded Xe. Should I start again? Today, Xe provides foreign exchange information and services to over 250 million people from all around the world each year.
Ed?
Good morning. I'm Ed Glassman from MasterCard. I've been building products and services in the payments businesses for a long time and lead a large group of teams that serve this payments ecosystem of ours across the US.
Yep. Good morning, everyone, and glad to be back here. Thanks, Robin, for the invite. Nana Murugesan, I'm from Samsung Electronics. I lead services and new business. That includes Samsung Pay as well as other services such as Bixby and Samsung Health as well.
Lee, you want to try your mic again and finish up your
Yeah,
thought?
so let's try this one more time. All right, so going back to the challenges, I think one of the challenges that the retailers face is the shift in customer expectation. And I think this is where, Thad, you mentioned that retailers used to control the customer experience, how customers shop, losing control of the mic again.
Can we just get a hand mic up here, please?
The hand mics don't have the same frequency.
Oh, they don't? Okay. You grab the one, yeah, we can grab the one on the podium.
Sorry about this, folks.
Test, test.
There we go.
Thank you. All right, we'll try this again.
There you go. All right.
So the challenges that we face is the AV. No, I'm just kidding. My very good friend of mine used to say that AI is easy, AV is hard. So going back, I think, Thad, you mentioned that the retailers used to control the customer experience, how customers shop and how they pay. And I think that's the point where, the current retailers are facing, which is, they need to have strategies to go and come to where the customers are. And today, with the digital and mobile, customers are everywhere and they are able to shop everywhere. So rather than pulling them into existing retail structures of transactional nature, I think the retailers need to go and find their spots to where the customers are. And I think another challenge, and this is going to obviously sound very obvious, which is the retailers need to continue to deliver on the value and the brand purposes of the customers. And, some retailers will continue to be successful. There's no doubt about that. But what retailers really need to think about is, again, how do they actually intervene, but in a positive way, so that the customers can understand what the brand's relevance is. And I think we're going to talk about a lot of this during today. But ultimately, it comes down to data and insight, right? So how the retailers can understand some of the purchase patterns and the behaviors, and what is really relevant and meaningful for the consumer, so that that can be delivered in a timely and most appropriate manner, so that it's most contextual to what the customer's looking for and what they're searching for. And I think another challenge that the retailers face, again, I think we're at CES this week, so I think we're going to see more about this, but currently we're seeing a step change in the growth of electronic devices, personal electronic devices, right? And hopefully we'll see more of that this week as well. But one of the things that the industry talks a lot about is this omni-channel experience and reducing the friction. And I'm kind of scratching my head and going, every time I add another gadget in my life, I don't know if actually that's removing a layer of friction or if actually adding another layer of complexity. So I think what retailers need to think about is, how do they actually look at that? How do they look at that space and really understand how these devices will interact? And they're not going to be immune from having to understand and having a view of this. So they need to look at the space through their own lenses and understand how these devices connect, how the customers need to engage with these devices, and what the retailers need to do in the new experience so that they can remain relevant and really remove the customers from current distractions that they face in the retail world, which is realistically, you still have to wait in line, you still have to search for products, you still have to look for your return policy, for example. So the retailers going to where the customers are rather than pulling them into the existing structures, as well as understanding some of the new trends in the devices that we see, and how to adopt the more of the open architecture and open APIs so that they can drive the interaction and continue to deliver value to the customers.
That's an interesting point. If you look at a payment from one perspective, all it is a data point. It is a point in time where something happened, value was exchanged, and that's really important data. So what can companies in the payment space do to support this, to help the retailer get through this mess? Any thoughts?
Sure, listen, there's a boatload of things. And if you're a retailer, at the end of the day, payments is really interesting. But if you're a retailer, you're worried about the same things that you've always been worried about. How do you find the next customer? How do you make sure you know what they want and you have it for them and you can deliver a great experience? And to the extent that payments gives you some information and data that gives you better insight about that, and lets you deliver a really clean, seamless experience, that's important, and it can be part of that transformation. And the retailers that Synchrony serves and that others serve, they're really starting to take that payments data that used to be, yeah, it was nice and it was interesting and they made some money off of a co-brand program, but it's really turning into a core source for helping them figure out what do they do on the marketing side, which at the end of the day is really the core business of what makes for a great retailer. So I think there's a couple of things that are happening on the payment side that are making it, center of the plate, boardroom level discussion for a retailer, not because it's about what payments does, but it's about the information that it brings to being a great retailer.
Yeah, go ahead.
No, sorry, I think you bring up a very good point here about the data too, and obviously Synchrony, we work very closely with MasterCard as well. And I think within the industry, it's our obligation to protect the data and make them secure so that we deliver not only a great and seamless customer experience, but also the experience that is safe and that can be sustained throughout.
Yeah, another thing for retailers, right? Another challenge is there's a lot of fragmentation. There's tech wallets, there's bank wallets, there's network wallets, fintech. I mean, there's so many different things that they are facing, and that's a challenge. And as an industry, that's an area for us to partner because there are different ways in which we can drive our own strategies while also partnering and making it easier for the retailers as well, right? So that's another thing which I think is a challenge, something that as an industry can work together to do a better job at. Right?
Yeah, and one of the interesting things is that the payments industry has not generally been very consumer or merchant friendly in the past. We're basically giant processing engines that did stuff, but now it's gotten a lot more complex. And one of the interesting challenges out there is what the networks are facing. The networks used to be nothing more than a bunch of rails that basically ran transactions back and forth, and there are still those who think that that's all they do. But Ed, what's going on at MasterCard in terms of how you change the role of the network in this environment?
It's a fascinating story, but I think the core thing for us today is three things. One, it's something Thad said at the start, which is e-commerce is about 9% of total sales. And we're all sitting here, and by the definition of the fact that you made the journey to Vegas and you're sitting in this seat right now, it means you're way out on the edge. You're way more interested in this stuff than the average human being. They just want to go buy things and get it done. But if you look at it and you say 9%, that's a big number, but this past year it grew at about 1%. And that's not a very impressive number. That's not nearly the kind of pace that e-commerce has been growing at. And mobile payments, which is a smaller number, has a better growth factor, but it's still starting from a small number. So I think the real question that we all struggle with is, so what's it going to take to really turbocharge this? So we see it in a few key areas. One is kill friction. It's just, you have to eliminate friction entirely. So for those of you that have had the Uber experience, payments is no longer something that's part of getting in and out of that ride, right? It doesn't exist. It's an attribute that you get as a message after you get out of the car. You know what it's going to cost, you see surge pricing, et cetera, but you're done. And you're seeing some great experimentation happening in the retail space to emulate that. There's other ones that we're working on to really try and create a new vision of what the consumer experience is. How many of you guys ate in a restaurant last night? Okay.
It's many.
How many of you sat there and waited for your check? Right? We all do. And it's the bad part of the dining experience, right? It's bad for you as the customer. If you've got little kids and you're out dining, it's the nightmare part. That 12 minutes where you're waiting for the check is like end of life. And it's also bad for the restaurant because it's time when that fixed asset is actually not being used and being profitable. So being able to, for instance, eliminate the check is an example of removing friction in the dining experience. So we're working with all kinds of companies to look at their ecosystems to help try and eliminate friction in the payments flow. But at the same time, you got to fulfill the customer promise. And the customer promise is safety and security. And as an industry, we've not gotten it done, right? We did EMV the chip cards, and that virtually eliminated fraud. So if you've got a chip card and you pay with that chip card and you go to a merchant and they accept the chip card, fraud is basically gone. And the reason it's gone is it uses the same kind of underlying cryptography to guarantee the security and integrity of that transaction as we're seeing in blockchain, and we see frankly, when you fire up your browser and it says HTTPS and you feel comfortable going and checking your banking details, it's that same underlying technology, incredibly powerful and robust. We're taking that same technology and bringing that to the online world. And so think words like tokenization carry with it all of that underlying tech that makes and fulfills that customer promise of, I can do this transaction online and it's secure. But right now, customers don't feel safe and secure, and it's why something like almost 80% of checkout is done as a guest, because customers don't feel great about leaving their payment details, because we've all seen the plethora of merchant attacks that have had account data compromised, and you lose your details. And if you get your data compromised, it's a pain in the neck. It's really disruptive to you, and you feel very, very unsatisfied as that consumer, downright mad, right? So I think that we as an ecosystem communally have to provide the same level of safety and security in the e-commerce world that we've delivered in the physical world. And when we do that, I think we will see a real burst of growth in the e-commerce space when it's accompanied by things like a frictionless consumer experience.
Mm-hmm. And Barrick, you live in the world of cross-border and buying stuff from one country and paying for it in another country. And that side of the environment is really changing quickly as well. And one of the things that's really interesting is that cross-border commerce is pretty much touching almost every merchant in the country. One of the really interesting things around here, if you go over to Caesar Palace or you go just about anywhere else, you'll see an Alipay button just about everywhere. Over in Caesar's Palace, they have a great big banner that says Alipay welcome here. So cross-border buying stuff in other markets is increasingly prevalent, and I'd like to get a sense of where you think it's going, Barrick.
I think one of the impacts that we are already seeing is a number of new entrants coming into the space trying to create better cross-border payment experiences. And from what I've seen, I suspect that many of these companies, as they sink their teeth into that problem, they begin to discover that cross-border payments are significantly more complex and difficult to implement than it might at first appear. And so sometimes by the time they've addressed this complexity and difficulty, the services that they end up offering end up looking like a lot more like the services that already exist today. And it becomes much harder to eliminate the friction, as we talked about. And there are a couple aspects of the complexity that you can talk about. One arises from the inherent financial risk that comes from the volatility in the currency exchange rates, and another aspect comes from the regulation. On the financial risk front, I think a lot of people who are conducting cross-border payments aren't even aware that they're assuming risk when they do that payment. And providers like XE can help those people to understand and manage that risk. And any provider who's looking to provide services to those people also need to be able to do that. Another impact of volatility is sort of exemplified by what happened in June 2016 when the UK had their Brexit vote. And many customers of some of the newer and less established cross-border payment providers discovered that during that evening they couldn't actually initiate transactions, whereas customers for some of the more established providers such as XE were able to enter into transactions. And that's just a symptom of the fact that being able to facilitate transactions for customers when the market volatility is so high is not easy to do, and requires a lot of time and effort and good banking relationships, and so it's a challenge on that front. On the regulatory front, cross-border payments are subject to significant regulation, and I think a lot of the new entrants are hoping that they can accomplish what Uber accomplished, And the demand for their service will be so high that it will force regulators to change the regulation. But the nature of the regulations that Uber faced are significantly different than the nature of the regulations associated with cross-border payments. You know, I'm fairly sure that if Uber's service had made it significantly more easy for terrorists to kill people, it wouldn't have turned out the way it did for them. And you know, one last aspect of regulation that's a little bit timely is the European Union has a new privacy regulation called General Data Protection Regulation, or GDPR. And if you're an organization who is dealing with data associated with people or organizations located in the European Union, you are subject to that regulation, regardless of where you're located in the world. And if you don't comply with it, you may find it challenging to actually acquire customers in the UK. And in a worst case, you could find yourself subjected to fines of up to 4% of your global revenues, or $25 million, whichever is greater. So it's very exciting, all the innovation and activity that's in the space, and very positive to see. But there are some challenges that are going to impact how that all plays out.
Yeah. Regulation is one of the bigger challenges that we have, above and beyond the fact that we need to keep things safe and secure. And you know, as this evolves, this conversation evolves, I think one consistent thread is that we're in the never-ending, ceaseless pursuit of getting rid of friction. That's really what it's all about. And a few years ago, some interesting technology came into the world that was specifically designed to address that. It's called mobile wallets. With Apple Pay, Android Pay, and Samsung Pay being the local examples of them. And you know, while it shows great promise and it's really incredible technology, and it's frankly the most secure way anybody can do anything with the transaction, we are now up to 1% penetration of usage in store, up from 6.6% a year ago, which is frankly quite a leap, but still we're at 1%. It's not much. So Nana, what's going on in terms of getting usage of wallets up, and how do we make that happen?
Yeah. Well, first of all, we made some progress, looks like, so 0.6 to 1. I guess I just have a question for the group over here, right? Like, when you have to make a payment, which you do so many times a day, how many of you think of using that mobile wallet, right? Samsung Pay or Apple Pay versus, you know, well, that's good, but we still have a lot of, you know, work to do. And that's what we are working on, you know, right now. Specifically, there are 3 things that are kind of slowing things down, if you may. First is, you know, it has to be flawless. There's still some glitches in the system. Sometimes things don't work. And as an industry, we just need to make sure that the technology is flawless, so that there is a peace of mind when you choose to use your mobile wallet. That's one. The second thing is ubiquitous, right? Is it going to work where you're going to try to use it? And one of the things we're doing at Samsung Pay is obviously not just NFC, but also MST, magnetic secure transmission. And that means that you can use Samsung Pay anywhere that you can swipe your card, you know, or tap your card, right? So that gives more of a peace of mind, and it gives that ubiquity and the ability to use it almost anywhere, and that's helped us a lot, and that's one of the main reasons why we are quite a popular option, and it's increasing. And the last thing that we started doing, and we talked a lot about this last year as well, is creating new value, new incentives. You know, why should consumers, merchants, you know, adopt mobile wallets versus some other payment method? And there are so many out there. And we launched a program called Samsung Rewards about a bit more than a year back. It's done great things for us, you know, to increase that bottom of the funnel, to increase that engagement. We're pleased to you know, let you know that even though we increased doubled our number of users in the last 1 year, which is better than sort of the industry rates, so we doubled it. But the power users, the users that use our service very frequently, almost every day, you know, multiple times a week, that's increased almost 5 times. So that's an area which we've been working on. We want to do more and more of that, is to create these new incentives and new benefits and value propositions. And we feel like these are things that hopefully will increase that to a much better number than 1% when we are here next year.
So in addition to the mobile wallet, there's a product called a contactless card, which is big in Europe, where you can just tap your card, use the NFC terminal, and it works almost like a mobile wallet. Couple of questions for the entire panel. Number one is, do you think that that concept will come to the US soon? Number two, what do you think that will do to the overall role of the mobile wallet?
I guess I'd look at it from a network perspective, for instance. We've seen that in Australia, UK, Canada, where that notion of tap and go for everyday payments just dominates the landscape. So if you look at the volume and behaviors of consumers, that's what they do. And so they started with that piece of tap and go enabled plastic, and mobile wallets have come on the scene afterwards. I think here in the US, we didn't have the critical mass of infrastructure. But stealth moment, we all just went through EMV. As an industry, together, we spent billions of dollars replacing the infrastructure and the systems on both sides. On the issuer side with cards, while we enabled wallets, and on the merchant side with new terminals. Every one of those new terminals, virtually every one of them, is NFC enabled. So the real challenge is, why didn't they get turned on at the same time? And it's a really simple answer. If you're running a business and you absolutely have to turn on EMV, that's the one tech project that you're going to go focus on. And you'll circle back to the NFC piece of it later. So I really do believe that we're going to see that next step, which is see the deployment of lots of wallets and physical cards, but that merchants will start to go back and light it up because they have a great experience. What we're doing to try and catalyze that is go look for places that you can get big share of consumer behavior. So one of those is transit. So we're working with a lot of cities in the US and around the world to enable tap and go for transit. So you've seen that in like Transport for London, and it radically transforms the behavior of the people and the areas that they shop. The same thing is coming to New York, Chicago, Boston, and a whole bunch of other metro areas in the US. And we do think that the same thing will happen. It'll catalyze and change people's behaviors in those markets and spread from there.
So I think to add to that, Ed, I mean, I completely agree with you in terms of the technology and the adoption coming to the U.S. as well. And I think from our standpoint, from Synchrony's Financial, we want to make sure that our customers have access to their cards in whatever shape or form factor, right? So whether it's a card that has a contactless capability, which again I think will reduce the friction one step further, but also we know that the payment space is evolving and it will continue to evolve. Started with the card, we had now chips, and that we have contactless, mobile wallets, watches, cars, refrigerators, and we can think of different form factors. And we want to stay as agnostic as possible and focus on the user experience and making sure that the customers have access to their credit product, again, regardless of the form factor. So again, I think as an industry, it's our job to make sure that we make it easier for the customers to transact. In fact, to a point where the transaction or the payment experience feels as silent or invisible as possible, like in the example of Uber, such that the experience becomes far more focused on the brand and the relationship that the brands and the retailers want to deepen with the customers.
Great, and that's a great segue into a last question, which is 5 years from now, what does the payment landscape look like? I'll start with Barrick, and we'll just work our way this way.
Well, I think that from a cross-border perspective, there will be some successes with people trying to improve the cross-border payment services that are available. And I think mobile wallets and things like that will have greater adoption. So I think those are some of the changes we'll see.
I think we'll see more of self-service nature of a retail space. again, the retail, brick and mortar isn't going away, right? However, I think what's going to happen is the way it looks, the way the shape it's looking, and the accessibility to the customers will change. So I think the customers will have more options in terms of how they access, how they actually pay for, and how they receive the products. And again, I think this is a kind of timely and appropriate place to think about robots, right? So maybe robot-assisted, 24/7 drive-through type of a retail space where you can come in and grab your products that you ordered and you paid for online, and regardless of the time of the day. So I think we're going to see more of, again, self-service driven and focused with artificial intelligence and some of the other robotic transformation that we see.
I think that omnichannel becomes way more ubiquitous. You see things like shop at home with a much more direct visualization. So if you put on your VR glasses and you can shop at home, you might want to actually go in and feel that item in the store. But if you can have nearly the same kind of visual experience at home, at least for me, that makes me much more inclined to go buy things if I don't have to actually step into a retail store. And I think at the same time, retailers get better. Retailers get better because back to that notion of who they really need to be, they need to know their customer, they need to know what really is important to them, and they need to provide that in terms of products and services. Getting access to the data is what makes that possible.
Yeah.
No.
And I think payments are going to play a huge role in IoT. We always think about payments as, mobile wallet and so on and so forth, but really we should be thinking about seamless payment experiences across devices. I mean, even at Samsung, we sell 500 million devices every year, right? But if we just start thinking about those use cases to make those experiences seamless, and really a lot of that has to do with payment.
Yep.
And there's a lot of work that needs to be done, and I feel like 5 years is a good chunk of time that we're going to see payments play a big role in IoT. We don't talk too much about it, but I think that's going to play a big role.
I agree. We have time for a couple of questions, if anybody has a question.
Sorry, where's your thanks.
This is mainly for the Barrick, but also for everybody else. I think probably you guys are aware of this GPI initiative of what's wrong of. So this GPI global payment initiative of this global payment network, and how does that going to impact the cross-border payment? You know GPI?
No, I have to apologize. I'm not familiar.
Okay, so it's not FINRA, but what's?
Is it W3C, the W3C?
No. It's
browser-based model?
mostly bank-to-bank payment. It's not consumer. Okay, that's fine.
Is it the Payment Services Directive in the UK, or?
No, it's GPI. GPI is a global payment initiative out of bank-to-bank payment. I mean, what's the name of global network? Global, it's SIFMA? Not SIFMA, sorry. Just don't worry.
Well, you've stumped the panel. Congratulations. That was a tough question, and we apologize. Another question?
So, sorry for the question. I have a question for Mr. Glassman. So basically, mobile payment is getting big kind of attraction there in Asia. So I heard that you mentioned about a lot of terminals being installed, but in the same time, mobile payment gets more, I think, more promise in the futures. What's the actions for that direction?
Really sorry, it was difficult to understand that question. If you could perhaps just give me one more go at it.
Sorry, maybe it's a bit too close. I think mobile payment get more kind of attractions in Asia without installation of those terminals. So what will be the actions from MasterCard into that direction for the mobile payment?
Mobile payments in China, you're talking about the WeChat Pay and,
yes.
and Alipay,
Sure.
and what MasterCard, the network, is going to do about those? Interesting question.
Actually, there's for those of us that sit here in the US, it's easy to be myopic, and we get excited about the payment systems that we see directly at our fingertips. But if you look at WeChat, if you look at Alipay, if you look at a whole host of others, they are absolutely massive in scale and really deeply embedded in those economies. So we work with virtually all of them around the world. And I think the question that we all ask ourselves at MasterCard is, what's our role, what's our unique value add in working in partnership? One of the things that we bring is access to the world. So there's a lot of domestic processing schemes which have unique value in market, but as you try and go globally, as XE knows for sure, that's pretty challenging. I think there's two things that a consumer would say are near magical experiences. And that is the fact that, one, you can take out your phone and make a phone call or receive a phone call almost any place on the planet. And the second is that you can walk into any store, any place, and you don't even speak the language, but you can buy something with your MasterCard, and you can walk out of there with the goods or services, and the shopkeeper is happy to sell them to you because they know they're going to get paid. And so being able to be the bridge to the world has been one of the ways that we've worked with a lot of the local innovation schemes. And frankly, sometimes they're friends and sometimes they're enemies. And I think that's the nature of the payments business overall, is that frenemy relationship.
Great. And we're out of time. I'd like to thank all of our panelists. It was a great conversation. Thank you.
Thanks, Ted.
Thank you.